Yo, what's good? Welcome back to the channel. Let's not discuss the elephant in the room. I have a baby face. All right, enough of the debrief. When you're saving money and you're letting your money sit and grow, if you were just to, put that money aside and not necessarily put it towards any investment, you would be letting your money not grow for any future benefit. But with this thing called inflation, you're actually losing the value of the dollars in that bank account when you're letting your money just sit and do nothing. If you're not too familiar with what inflation is, to put it short, inflation is when the prices of everything around you start to rise and your dollar bill will soon get you less and less buying power. The current annual inflation rate is around 3.5%. So when looking for an investment, you're really looking for a 4% annual gain, or an investment that actually protects yourself from times of high inflation. All right, enough jibber jabber, let's get to the list. Disclaimer, none of this is financial advice. It is all entertainment purposes only. Yeah. First on this list, we have gold. Gold is historically the oldest way to hedge against inflation. If you invested $1,000 in gold 10 years ago, you would be at around $2,800, or around a 180% gain. Now, when you hear this number, don't go sprinting to your local pawn shop and putting your life savings into gold. The price of gold is very volatile, and without proper research, that could be a bad decision. What I actually would recommend is to invest in what is a gold ETF. A gold ETF is where you are buying gold and you are buying the ownership of the gold, but you're not actually buying the material ingot. There are many forms of gold ETFs out there, and to be frank, choosing one or the other isn't going to really make a difference since you're buying a commodity, not a individual company. One way to look at gold and choosing when you're going to invest in it is to look at the value of the dollar. Since the price of gold is very volatile, it is also a common inverse relationship with the US dollar. This means when the value of the dollar rises, the price of gold will drop. Vice versa, when the US dollar decreases in value, the price of gold will rise. Investing in commodities is a common thing you're going to be hearing in your Google searches for investments that will protect you from inflation. All right, jumping into the next one on this list, we have real estate. Now, I know what you're probably thinking. Noah, if I had the need to click on your video, what in the world makes you think that I have enough money to invest in real estate? Well, you may not have known this, but you can actually invest in real estate with just $80 with something called REITs, also known as real estate investment trusts. This is basically a form of investing into real estate as an industry and not just a single company. Some of the top REITs can be the VNQ, the RWR, or the SCHH. These ETFs are a form of investing in real estate that is basically really cheap. Now, when it comes to real estate investing as a whole, you don't really have much control since you're mainly investing into the industry, not just a single property that you can manage and fix up and sell on a normal market. But these REITs are seen as a common way to protect yourself from inflation. This is mainly because when inflation rises, so does property values. Because when you actually look at the real estate market, the landlord's gonna bump the prices when he has to pay more. All right, next on this list, we have what is commonly seen in a couple of my videos is high yield savings accounts. Now, I'm not gonna get too big into the definitions of these accounts, but basically, instead of letting your money sit in what would be a normal checking account, not getting you any annual interest, you could put it into one of my favorites like Marcus by Goldman Sachs and get almost a 4.5% APY for doing absolutely nothing. I personally use this platform. It is very user-friendly, and I will recommend it to anyone looking to get into a high-yield savings account. All right, now the last one on my list, number 4, and probably one of the most boring ones, but it is literally just creating a stock portfolio and just buying stocks. Having a diverse portfolio is a great way of protecting yourself from inflation. The S&P 500, known as the top 500 companies in the US market that's traded on the New York Stock Exchange, over the last 30 years has an average annual return of 10.22%. And if you're not really looking into the markets right now, the S&P 500 has hit all-time highs with the last 12 months nearly returning 30%. There are many ways to invest in the stock market and just start creating a portfolio. This can be through very user-friendly platforms like Webull or Robinhood, or through very well-trusted and complex platforms like E-Trade or Fidelity. Now, picking the stocks and choosing what you're gonna get into and what industry you should try and enter, I'm not going to be the judge of that just because I'm not a stock expert. But I do know that the actual growth of the stock price isn't going to be the only income you gain from doing this. Because when creating a diverse portfolio, you also want to look at dividends. And dividends is a income, a literal piece of change that the company is going to give to its shareholders for just having shares. The dividends that you earn in just holding these stocks add up and can create generational wealth, with prime examples being Warren Buffett, who have become billionaires and very well known for literally just holding on to their investments and getting dividends from these major companies. These dividend yields itself can almost give you 4 or even 5%, and it has never been easier to start investing than today. I linked below the link to create a Webull account, where when you create an account you get some free stock. But other than that, that's gonna wrap up the video. If you liked it, comment, subscribe, do whatever the hell you want with it. I don't really care. Toodaloo.